think the U.S. dollar will perform this year? Let me read you a line out of a recent missive that caught my eye from the head of an investment company. Here it is, quote, "Fundamental, technical, and sentimental indicators all paint a bleak picture for the U.S. dollar and, by extension, America's bubble economy. Ironically, the dollar's bear market rally of '05 only worsened its long-term outlook. Those who helped sow the winds of that rally had better brace themselves for what could well be the mother of all whirlwinds." The author of that piece, Peter Schiff, he's not really that bad of a guy, president of Euro-Pacific Capital, joins us now. And, you know, you say America's bubble economy. This sounds pretty doom and gloom. What is it that you see that has you so disconcerted?
Well, the problem with America's economy, and I've talked about this many times, is that Americans are not producing and Americans are not saving. Americans are consuming and borrowing. And what makes this possible is the inflated value, the artificially high value of our currency. And we're able to trade our currency, just pieces of paper that we print, for the products that are manufactured in the rest of the world, predominantly in China, in Japan. And since there aren't enough products that we manufacture so that the Japanese exporters can buy things with their dollars, they end up selling them to their central banks. And the central banks are accumulating these vast reserves of U.S. dollars, which they do nothing but lend back to Americans by buying our treasuries, buying our mortgage-backed securities, which just feeds this loop. Because now Americans borrow even more money against the inflated values of their homes, and the trade deficit gets bigger and bigger. Our trade deficit is now running at close to $1 trillion a year.
But that didn't hurt the dollar midway through the year when it started to rally. And you know as well as I do, a lot of dollar shorts got slammed. Warren Buffett himself had bet against the dollar because of all the things you outlined.
Remember, the dollar fell for 3 years before 2005. It finally, you know, even a dead cat, right, will bounce. We had a small rally in the dollar. A lot of people were too short the dollar, probably technically at the end of '04, early '05. So we had a rally. But the problem was the entire year of 2005, the fundamentals for the dollar got a lot worse. And that rally enabled Americans to take on even more mortgage debt, to run up even bigger trade deficits, and now we have a bigger problem of an excess supply of dollars.
Why does this matter to the average investor?
Well, it matters to the average American. It matters to investors. It matters to consumers, because the falling value of the dollar is going to lead to a diminishment in our standard of living. Americans aren't going to be able to buy as much. You know, I wanted to point out, you know, a lot of your guests have been talking about the Dow. The Dow is now at 11,000, and people are talking about, will it make a new high? Well, back in 2000, when the Dow was at 11,750, that equated to 45 ounces of gold. Today, the Dow is only worth 20 ounces of gold. So it's lost 55% of its value. The Dow would have to go to 25,000 to be where it was in terms of gold 6 years ago.
And gold is roaring ahead, 25-year highs recently.
Gold isn't going anywhere. It's the dollar that's losing value. I mean, that's why politicians love inflation so much, because the voters think they're getting wealthier while they're actually getting poorer. If you really want to know what's happening to your wealth, measure it in terms of gold.
If I am a company CEO and I have a global footprint, I'm publicly traded, I'm thrilled the dollar's getting weaker because my goods are then cheaper to foreigners.
But it doesn't matter if you're earning more dollars that have less value. You know, that's not what you want. It's like, you know, anybody can sell more products if they put them on sale. But that's not the idea. You want to get full price. And the world is not benefiting by exchanging their goods for our pieces of paper.
You're dollar short, and you're recommending to your clients what?
Well, we've been out of the dollar for years. I mean, once you recognize that the dollar's purchasing power is doomed, I mean, Warren Buffett can see this. A lot of intelligent investors can see that the dollar's fate has been sealed. You know, as soon as the Chinese and the Japanese pull the plug on the dollar, you know, our whole standard of living goes right down the drain.
So what do you like better?
Well, what we want to do is we want to get into the other currencies against which the dollar is going to lose value so that you can preserve your wealth and preserve your purchasing power. We've been investing a lot in Asia, Hong Kong, in Singapore, in Japan. We've been investing in Australia, New Zealand, the natural resource countries, up in Canada, in some parts of Western Europe. We've been owning a lot of resources, a lot of energy, a lot of mining shares, not only gold and precious metals, but a lot of the industrial metals.
Peter, thank you very much for joining us as we look at the Aussie dollar here. It's taken a bit of a hit lately, but good to see you. Come back again. We'll see how the dollar performs and have you back.
Thanks for having me.
Peter Schiff, president of